genuine investors, they appreciate the fact when people have realized that something is not working and they show the flexibility that they've adapted. My name is JD. I go by JD just to make it easier for everyone. I'm the founder and CEO of Trukkin, which is a technologistics platform in the Middle East and Pakistan. We started our business in 2017 and subsequently expanded to the countries in the United Arab Emirates, Saudi Arabia, Pakistan, and we have been serving the broader Middle East area, covering almost more than 12 countries. I started my career as an investment banker. Honed my skills doing corporate finance, doing M&A, capital advisory, capital raising, and advisory for a lot of companies in the U.S., Asia, and Middle East. And at the end of 2015, I started thinking about what I want to do, with my career in the long run. And there were a lot of entrepreneurial opportunities that I was seeing, and I just took a leap of faith and jumped on it.
So tell me about that experience then. So you came from the sort of investment background and helping other companies. So you must have come at this with that point of view. So looking at what would be investable and what would be appealing to outsiders. So tell me about that thought process.
So totally, I think this wasn't a plan, right? From the beginning. I mean, I was enjoying what I was doing. I had never thought. Firstly, I had never thought that I will leave New York to move to Dubai. That happened by chance. Also, I had never thought that I'm going to be leaving something like investment banking and dealing with trucks and truck drivers and this sort of the logistic business. What happened was, towards the tail end of my career, doing investment banking, or pretty much from 2011 to 2015, I was traveling a lot to Saudi Arabia due to my banking work. And while spending a lot of time with the chairmen or CEOs of big companies, so I can't recall exactly, but there was a discussion around logistics and how each company required a massive amount of road transportation, and how they were dependent on the old school legacy fleet owners. At the same time, there were a lot of startups which I was reading about who were trying to after seeing what Uber had done, what Kareem had done, what Airbnbs of the world have done, were trying to establish asset light business model, on demand sharing economy. And I was reading about companies trying to do that in India, companies trying to do that in the US, in Europe. There were a few big ones in China. And when I was in the Middle East, when I saw that on the road, I started like digging deep into what's really going on and what the market is like. It revalidated that opportunity, and the more I kind of researched into it, I got sucked into it. So to answer to your question, yes, corporate finance did help me to look at the business from the shareholder perspective, from the investor perspective. I think what corporate finance really helps kind of helps broaden the vision of what a company could become in the long run. So how we could achieve scale, how we could create significant shareholder value, uh, with an idea or an opportunity if well executed. I think all those things kind of went into the research part, if I were to say, what was the market size, how big were the market, the competitive landscape, the timing, the opportunity, and how and what it can become. So when I looked into all those different parameters, I think it became um, pretty evident to me that if I don't do it, someone else will anyways do this. So might as well take a leap of faith and jump into it. So with a leap of faith, I jumped into it basically.
Incredible. And so today you've got thousands of drivers using your service. You're in 12 countries. Obviously didn't start out this big. So I think it's easy to say we are the Uber of or the Airbnb of because it's a great way to explain it. But in reality, it's very difficult to start that sort of two-way marketplace. So how did you get this going on sort of day one?
Ah, man. Yeah, I think when you look, I mean, I still think that we are at a still very early stage startup company, right? But yes, if I were to rewind back those 4 years, when it's day one and you are employee number zero, and you are going to buy the first pen to even to run this business, I think there's so much more goes into building the business, right? And this is where I guess almost all the founders will relate to this. Is people, when you have an idea, when you're starting it out, pretty much everyone starts with an assumption that they have a great idea, and it's going to be a great business you're going to launch, and tomorrow you will be Uber of something, right? That's pretty much how everyone starts, because in their mind they have justified it, they have sold it, it's a great business idea, things will fall in place, you know what you're doing. And then you go in and you get slap on your face, right? Whether it's a product perspective, whether it's market perspective, or thousands of other things, right? It's almost like running a car, and you have to build the tire, the engine, the steering, the seats, and everything has to function seamlessly together. So for sure, I think when you start, you pretty much go through hurdles on a daily basis. You go through obstacles on a daily basis. I think it's a cliche, but it's really true. I think the perseverance and grit. I think just keep on going, keep on going. I think that's you keep on doing that, and and the flexibility as well, I think, is very much required in terms of adaptability, how quickly you are ready to pivot, how quickly you are able to understand what you are doing is not right or what you're doing is working, and really going after it day in day out. I think so there is Jack Ma, very there's a very famous saying from Jack Ma: there's always a light at the day after tomorrow, right? And most people give up basically tomorrow evening, right? So and that's very true, because you go through so much of the pain points, so many hurdles, so many obstacles, so many downfalls, that one might easily give up. Not easily, I mean, you might be compelled to give up because it's just too much of a strain it takes on a founder.
And you'll have an interesting point of view on this with your investment background. So when founders are going to investors and they really sell in their vision, and whether it be months or a year later, they decide they actually need to pivot.
Mm-hmm.
What are some of the best ways of explaining to the investor why the initial vision wasn't quite right? And I know a lot of founders are nervous about having these conversations.
In my understanding, in fact, genuine investors, they appreciate the fact when people have realized that something is not working, and they show the flexibility that they've adapted. I don't think it's a sign of weakness. I think it's a sign of strength, because, to be very honest, whatever is working today might be redundant in a couple of years down the line. So the whole ability to show your agility in terms of running a business, I think, is a far more important trait than anything else. I think early stage investors are mostly backing a concept and idea, but they're also significantly backing a founder, right? And what they expect is, if you are backing the right management, right founder, they will do the right thing at the right point in time, right? So it cannot be set in stone. I think that's what differentiates certain startup founders than the others. They adapt themselves with time, their ability to understand where the market is going, and be able to really be agile in terms of that, proving that business. So I think, instead of being a weakness, I think one should express it as a strength. And if there is a, I think, look, investors themselves invest in a significant number of companies, right? And when they look at their portfolio, they realize there are some wins, there are some losses, there are some companies who were not able to take off or unable to scale, or they had to change something. So they would always understand, I believe, that if someone has to pivot something for the good or betterment of the business model, I think the mere realization and execution of that is far more important than actually not pivoting it and being stuck with, okay, this is what it is, take it or leave it.
Absolutely. And what were some of your learnings then? So suddenly sitting on the other side of the table and trying to raise investment for your own company, were there any real surprises there, or what were the key learnings?
Yeah, there was. I think I realized that ideas are probably overrated. I realized execution is far more important than just having an idea on a presentation, or a presentation on piece of paper or a slide. One could have a great idea, but executing it really is the biggest challenge. So what I would have initially thought, that if you have a well-crafted idea with the numbers backing up and everything, then pretty much things should fall in place. But when you yourself kind of dip your toes into it, you realize that idea is one thing, but really executing is the most challenging part of running the business. And my own thought process around, if I were to invest in a startup, has changed a lot. Uh, in the very initial stages of the company, whether it's seed, pre-seed, or pre-series A, sort of or series A also, I would say, I would be honestly backing the person who is behind the wheel rather than the car itself. As the saying goes, bet on the jockey, not on the horse. I think it's very much true in the beginning, because you might have a great idea, but if the founder is not driven, or easily kind of is giving up, or changing the ship, or doing something else, uh, that would just throw off even the best idea to have nothing, or not being able to take off. So I think that has really changed in my mind.
And what did you have to have in place in your mind in terms of proving the concept, and what stage did the company have to be at before you would then go and approach investors for yourself?
I think, look, once you have, so some people go and approach investors when they're at the ideation stage, and you might find certain investors who believe in the idea and kind of back you up at that point in time. Once you start the business, then you have to really show some level of attraction, because then you are no longer selling on a mere idea, but actually on how the business is working. Once you start showing the traction, I think that becomes a good time to start talking to the investors. As people talk to many investors, they learn a lot as well, that how investors think about it. There is always something more which investors are always looking from you. If you are at the ideation, they want to see traction. If you are at the traction, they want to see the speed of growth. If they want to see the speed of growth, they want to see how good your team is. If they see how good your team is, they want to see how good your processes are and systems are internally to manage that. If that is in place, they want to see how scalable you are. If they see how scalable you are, then they go back, like, do you really have the management bandwidth to do that? So you are always juggling, like 20 different things, right? You're always trying to counter argue that why you have the right bells and whistles to make this work. So there is no easy process, right? There is no like black and white that one easily goes and does it. Or if all these things are there, then the question comes down to the valuations, at what stage, how much. So there's so many different things, but one has to just keep at it, really believe in what you are doing yourself. And if it comes out naturally in your conversation, right? If you know your subject, if you know the business, if you're doing it day in, day out, you can talk to pretty much any investor and talk about the business. And you meet many of them. There's some of them will start liking it, and then you find those great champions or brand ambassadors who are going to further help you further the cause of the business. And that's how you kind of create a nice, healthy mix of people who then help you go to the next level as well.
And you've been through all this now. You've proven the model. You've raised the cash to make it happen. And from an outsider's point of view, it looks like you've grown at an incredible rate in terms of expanding internationally, growing the team out, which is really exciting as a founder, but also, as you'll know, comes with the growing pains internally. So what were some of those key growing pains for yourselves?
I mean, we can talk about innumerous number of pains on this. Um, I think certain pain points always are in terms of, as you grow, as the business grows, it's a happy problem, right? Because you want the business to grow, but as the business grows, your team size needs to grow as well. And I think at the end of the day, business is a lot about human capital, right? Finding the right set of team members who are strategically aligned with you in terms of the thought process and where you want to take the business is very key. So finding the right team. Also, when you are expanding the business into other countries, so clearly it's not everyone is sitting under the one roof. You have multiple branches, and whoever you are hiring on the the other branch, how do you relate with that? How do you communicate with him or her to make sure that your culture doesn't get diluted? You have the same strategic vision or communication being done across the organization. I think those are some of the initial challenges. Also comes with, so when a company is fast growing, you're going through this zone of pain where uh, your company is big enough that you need a lot of senior people to be to be a lieutenants or be second in command to kind of running the business, but you are not big enough to be able to afford them, right? So that's what I call that zone of pain. You need it, but you can't afford it. So that's the stage which a lot of people go through, and you just have to kind of put your head down and be at it on a day on day basis.
Mm. And what's all this meant for you personally? There's obviously been so much change over the last few years. So what's that meant for your role? How's that evolved?
You're right. So my role is evolving as we speak, because I can feel it when the day one, obviously you're starting it from ground zero. You are doing pretty much everything. Over the next couple of years, also, you are running pretty much everything. You're working on the sales, you're working on operations, you're working on customer experience, you're thinking about technology, the marketing, the finance, etc., etc. I think over a period of time, um, my role, the way I see it, it's more of where I need to find resources and being able to hire and place the best talent on the best positions, right? And provide them with the resources that they require to play that amazing music, right? So I think my role will evolve, or is evolving around that, to be able to find and gather the resources that the company requires to grow, and being able to hire the right people for the right positions, provide them with the right tools and opportunities and resources so that they can do what they do best.
Absolutely. So it sounds like quite an exciting time within the business. So what are the big goals over the next year or so?
See, personally, for me, when I look at growing the business, I look at always growing the business in a sustainable way. Some startups go and show that okay, they can grow tremendously and to raise capital, etc. My focus always has been that I want to grow a business in a sustainable manner, because no point building a ship which is go and hit the which is going to crash in like some time, right? So the most important part is when I look at our team and people who join us from various parts, I really want to be able to provide them with an organization where they can grow along with our organization, which is a long term thing rather than a short term thing, but with a high performance attitude, right? So over the next couple of years, our focus will be to continue to penetrate the markets where we are, deepening our roots there. Our goal will be to expand into a couple of new geographies where we are physically not present. At the same time, continue to invest into technology and other things which is required to give that flavor of the company as a very solid long-term sustainable company. So the goals are like very much clear, that what needs to happen in the next year or two, which is kind of strengthening the overall business and laying a very strong foundation while growing as well.
And for those listening, where can they find out more about both yourself and Trukkin?
I think I'm over LinkedIn, very easily accessible. Yeah, Trukkin, www.trukkin.com. It's there. I'm happy to talk to people who might be interested in our story and tell them more about ourselves. If there might be some information which might be there on the Google already about us, but more than happy to always talk to like-minded people and give them, or talk to them and learn from them as well.